What's going on with the price of gold? Is gold's performance satisfactory to you? The recent drops in gold's price, does that make sense to you given everything going on? We are going to look at some perspective to see if this drop in price is justified and to see if you should buy. Hey everyone, welcome to Campbell's Coins. Today it's all about this wonderful yellow precious metal called gold. I want to talk about price levels and performance versus what's going on here in the United States and of course abroad. Specifically, gold's price level and how with each economic and geopolitical situation, gold's price not only reaches new highs but maintains a higher price base for a greater period of time. Not only this, but the period of time in which gold falls in value, it is shorter and shorter compared to its recovery. Gold has performed really well this year, even though it has been dropping and lost about 8.5% in 2022. It's outperformed the Dow, which fell 18.57%, the S&P, which fell 21.6%, the Nasdaq, which fell 30.69%, and Bitcoin fell about 60% year to date. Not just this year, but for the last 2 decades, gold has outperformed the S&P. In terms of US dollars, gold has dropped. But outside the United States, gold's performance has been moderate to good. But more on gold's past performance in a bit. Speaking of undervalued, this video is brought to you by Gold Royalty Corp, found on the New York Stock Exchange, GROY. Gold Royalty Corp isn't a mining company per se, they are a royalty company. You might have heard about royalties when it comes to celebrities who earn cash for a project for years, even decades after it was completed. Gold Royalty Corp is similar, but for mining companies. What distinguishes Gold Royalty Corp from its peers is the company's business model, royalty and streaming. Understanding these two concepts is a completely different way of capturing the upside of mining activity with a de-risk form of exposure. For the mining sector, royalties are basically just a payment to a royalty holder by a property owner or project operator. Royalties are based on a percentage of the minerals produced and the revenues or profits generated from the property. The de-risk comes from the royalty company not having to mine for the gold themselves. Instead, they can fund the best projects, let other companies do the legwork, and potentially profit from gold discoveries. It's extremely beneficial to small and struggling mining companies. The costs associated with starting up and running a mine are enormous. Royalty companies give these miners access to capital in exchange for royalties. With royalty companies, there are distinct advantages. You get exposure to commodity prices, fixed operating cost, no development or sustaining capital costs, exploration and expansion upside without the overhead typically associated with those advancements. Royalties are non-operating interests in the underlying project, so the holder is generally not responsible for contributing additional funds for any purpose, including capital and operating costs. One of the things that I like is the limited operating exposure royalty and streaming holders get, while benefiting from any resource expansion or upside generated by exploration success, mine life extensions, and operating expansions within the areas covered by the interest. If a mine exceeds its cost, it doesn't affect the royalties. In fact, it presents the royalty company an opportunity to get more royalty from the property in exchange for more capital. These royalties don't go away either. It's adhered to the property permanently, even if there is a bankruptcy. And the business model allows the company to potentially generate revenues whether the gold price is rising or falling, since royalty companies set fixed prices for mining output. Because of this model, it's not unusual for royalty companies to outperform both the price of gold and the gold miners. In fact, looking at a basket of royalty companies over the past decade, they have outperformed both gold mining stocks and gold itself by a factor of 5. Royalty companies often hold very diversified portfolios, so if one of the properties stops producing precious metals, the royalty company can lean on other producers. Investors owning shares in a royalty company expose them to a number of different companies. Gold Royalty Corp is focused on a particular type of royalty known as net smelter returns, or NSR. This is based on the value of production, or net proceeds, received by the operator from a smelter or refinery. But why should you bother with Gold Royalty Corp? Strong and knowledgeable people in the industry are leading and running it. Amir Adnani is the founder. You might remember hearing about Mr. Adnani from my previous videos. He is the founder and chairman of Gold Mining Inc. and the CEO, president, and director of Uranium Energy Corp. And Uranium Royalty Corp. He is on Fortune magazine's 40 Under 40 Ones to Watch list, a nominee for Ernst & Young's Entrepreneur of the Year, and has been identified as one of mining's future leaders by Mining Journal, a global industry publication based in the UK. He has put a great team together for Gold Royalty Corp with top experts in multiple industries. Chairman and CEO David Garofalo is one such person. He was the former president and CEO of Goldcorp until the merger with Newmont in 2019, a $32 billion deal and the largest corporate merger in gold industry history. These two men have run the largest gold companies in the world, and now they run Gold Royalty Corp. There are many more, including the board of directors, all with expertise and a proven track record in the mining sector. Gold Royalty Corp has a massive portfolio. Gold reserves covering the United States, Canada, Brazil, Colombia, and Peru. One issue with gold miners is that they are often located in areas of the world with major geopolitical issues. 3/4 of Gold Royalty Corp's portfolio is situated here in North America. They have added 180 royalties to their portfolio in the last 18 months. These recent acquisitions have positioned Gold Royalty Corp with a forecasted compounded annual growth rate of 60% in the next 3 years. The royalties on these assets extend far beyond gold, including potential copper and silver mineralization. GROY is very discerning with who they align themselves with. They don't just partner up with any gold mine. You may recall I spoke about ESG in a previous video, and how governments are clamping down on businesses whose policy doesn't align with environmental and social governance. It's a touchy subject, I know, but GROY has forward thinking to look at policy trends and adapt to mining companies already heading in that direction. Seeing the potential with royalties, Gold Royalty Corp shares are held by gold market insiders like Eric Sprott, Rob McEwen, and multimillionaire mining tycoon Jamie Lee. These individuals all paid as much as $5 per share and have locked their shares for 3 years. Gold Royalty Corp's price is currently at $2.30 a share. A recent valuation by H.C. Wainwright lists Gold Royalty Corp as a buy with a price target of $8.50. I really like the huge potential with this company as well as their de-risk business model. As with any investment, I highly encourage you to do your own due diligence before investing. If you're interested in learning more about Gold Royalty Corp, or if you have any questions, please check out their website, goldroyalty.com. In 1980, gold's price hit all-time highs of $800. This price jump went from $175 to over $800 in less than 3 years. Historical reasons cited at the time was the high inflation which plagued much of the 1970s and geopolitical tensions. The Soviet Union invaded Afghanistan in 1979, the Iranian hostage crisis from 1979 to 1981. But yet, gold's price fell by over half less than a couple years after all this. Gold languished sub $400 for the most part for nearly 24 years, until October 2007, when its price exceeded 1980 levels. Gold's price reached all-time highs less than a year before the economic crash of 2008. One key takeaway I would like to impart on you is to look at how long gold remains at its new high. In 1980, it's less than a year before it nosedives down and remains basically stagnant. In 2011, gold remained above $1,644 for nearly 2 years, while gold fell in price to $1,080 in late 2016. It never fell below 1980 levels. And the time it took for gold to recover from the slump was 3 years, not 24, like the stretch from 1982 to 2006. Gold has remained above 2011 levels for nearly 2.5 years, and it has realized new highs. But recently, gold has been smashed down in price. We are told it's because of a strong dollar. Is the dollar really strong, or are all other currencies really weak? It's like picking a turd out of the sewer and saying it doesn't smell as bad as the rest. It's still poop. For those who don't know, 40% of all the dollars out there today were created in the last 2 years. That is an insane amount of money printing, and the current administration doesn't show any signs of slowing down. They just signed a $700 billion Inflation Reduction Act, spending more cash we don't have in an attempt to cut down on spending. I'll let someone else attempt to provide the logic there. What else has happened? Oh yeah, we are sending tens of billions of dollars to Ukraine. We just announced student debt forgiveness of $10,000 for student loans. For some cases, it could be as much as 20 grand. Could gold continue falling in price? Yes, it's entirely possible. In fact, I see gold hitting 1,600, maybe even 1,550. But I have to ask the obvious. Does that make sense? Does gold price make sense to you considering the geopolitical circus going on right now, the money printing, and talks from everyone about an economic recession? It doesn't to me. Maybe some guy on YouTube finds this normal, but let me remind you of gold's actions in the past. As things got worse, we saw gold's price rise. If the current events I pointed out were happening in 1980 or in 2008 through 2011, we would definitely see gold's price going up, not falling. I can see gold's price recovering very quickly as soon as the poop hits the proverbial fan. That's why I am still buying gold. I don't see it as catching a falling knife, but rather buying an undervalued asset in a time where its price is not a reflection of reality. I would like to thank Gold Royalty Corp for sponsoring this video. Sponsors help keep this content free for you. Your time is your most precious asset, and I appreciate you spending it here with me. Thank you all for watching. This is Campbell's Coins, and that is my 2 cents.